All right, for exercise 17-8, we have an installment sale. So that means that we're going to sell it now, but collect the money off it over a period of time. So for book purposes, we recognize the revenue at the time of sale, but for tax purposes, we're allowed to spread that out and recognize it as we collect the revenue. And this is reporting as the gross profit. And so they've already calculated our taxes payable for us for each of the 3 years that we're going to collect this income. So now we need to figure the tax on the tax expense for that. So for the year one, we have 7,000. Year one, we have the 7,700 times a tax rate of 35% in this case. That gives us a tax expense of $2,695. Now, the taxes payable is already given to us as 1820. So our journal entry on this would be tax expense $2,695. We'll have taxes payable, and that's 1820. And the difference, 875, is going to be deferred tax liability. Right? Now, this is a deferred tax liability because we did not record as much taxable income for tax purposes as we did for book purposes. All right. So for the second year, our taxable or our book income is 5,580. And that's times the 35% taxable rate. And that will be 1953. It's our tax rate. And we see that our tax payable is 2478. That's already given to us. So we're going to have tax expense of 1953 and taxes payable of 2478. And so the difference between those two will be 525. And we will be reversing the deferred tax liability in that case. Then in year three, we have 7020 in income times 35%. And that will be 2457. And we see that the taxes payable is 2807. So that will be tax expense taxes payable, and that's given to us as 2807. And so the difference there is 350. And that will also be the reversal of the deferred tax liability. Now, does that make sense? That's 525 and 350 is 875. Our original deferred tax liability was 875. So that works out. The second part of this problem is determine the net income reported on the income statement for all 3 years. So in that case, so year one is going to be the 7,700 minus the 2,695. And that will be 5,005. For year two, that's going to be the 5,580 minus the 1953. And that will be 3627 that we report as net income. And then finally, year three, we reported 7,700 before tax. I'm sorry, 7,020. 7,020 before tax minus the 2,457. And that will be 4,563. All right. So that concludes exercise 17-8. We're going to have to do a little bit more lecture now before we move on to talk about some other things that can occur with taxes on the income statement. So look for part 2 of the lecture for chapter 17.